Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. This is our Thursday edition, and I just want to confirm. Looks like YouTube is firing away. RationalInvestor.com. Excellent. Good to see. Awesome. So this is our Thursday edition. It is Thursday, May 28th, coming into the end of the month. I hope you all enjoyed Memorial Day weekend there. Oh my goodness, there are some pretty crazy things going on in the world right now, eh? Ay, 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 ay. Stay safe, play from a position of strength. Remember what your number one job as traders are. Don't put yourself into a dangerous situation here, everybody. It's going to be an interesting 2020, that's for sure. Thursdays on the site, actually, TRI is kind of a special day. We get the baby powder report from Julian, TRI principal. Julian's just absolutely exhausted right now. They pulled off a fantastic marketing campaign, him and another site longtime member, David. Very proud of the job that they did. As well, he's trading away his own accounts. And he had a long report about how he was down some money and felt a little frustrated, went back and did some journaling and some really good self-assessment, and really got rid of a lot of the clutter that he had on his screen that wasn't pertinent to his setup, and he was feeling very positive with his trading results over the past day or two. So excellent, in my opinion, fantastic, excellent report for the site community, giving them a real bird's eye view of a guy who's in there in the trenches trading every single day, and trading, Julian's trading some fairly sizable dollar amounts. So they're also, too, seeing the anxiety of someone who is trading larger size and has to go through the process of, the market sometimes is going to tell you you're wrong. You have to book a loss. It's painful. It sucks. But it is the brutal reality of a trader's life. It's just the way it is. So really, really good content for the site members here today. You can see we're doing this video a little later on. I think we're in about an hour and a half. This is great stuff. Heading over to our chart deck that we like to talk with you guys. Interesting to see US dollar here really coming off a good chunk here. So I'm getting the feeling now, of course, I'm a little worried that we're getting a lot of sort of wrangling in the market here ahead of a big US Senate vote on more stimulus funding, and the Republican-controlled party in the U.S. Congress, U.S. Senate in particular, is said that they're not really interested in approving that legislation. So I don't know whether I really want to believe too much of the big international currency market swings ahead of that vote. But just pure price action alone, we are looking very emmy here now. After looking WE a week or so ago, I remember a week or two ago, I was like, gee whiz, let's get ready for some rock and roll here. And then we just petered out. So, the general message here, if US dollar is heading down, that should be inflationary. It should be a pro-growth bet. And I'm seeing things like the euro was flirting with absolutely horrific levels there a week or two ago. It's put in the bottom, found some sort of footing, and it's starting to work its way higher. It's interesting. One gentleman on Twitter I like to follow, a longtime market technician. He was sending out a whole bunch of tweets amongst all his sort of technician buddies that they're noticing that the breadth of the market is starting to turn back up. You can see the S&Ps here surging to new highs. Big caps now are actually starting to outperform small cap market. I haven't, in fact, actually, that's not true. I might bang one off here, but we'll get to that in a bit. I haven't really seen too many huge jumps in the little stocks today, but quite a bit of green. Some really nice looking charts, I'll tell you that much. As well too, we talked about this on the site too. Thinking especially for level oneers, just going through their crash course on macroeconomics and stuff. If we look at internals, Mr. Mr. Oldtimer, I won't say his name, I'll probably mispronounce it. He was specifically watching the breadth, and I had kind of made reference to this recently, that I was concerned that breadth was starting to erode, but you can see breadth is actually starting to point back up here. So that's encouraging. I don't know, there's a few things here that are bothering me a little bit though. I don't like the fact that the put-call ratio is now basically back to sort of euphoric. Everything's, a bull market. Don't really like that. I think the VIX index still has one more FU move to go here. I just don't know whether we're done with this recent range here. Nothing really clear here. But actually, message, and this is one of our recent level 3 grads. We do one of the modules in our level 3 program is on intermarket analysis relationships, and really doing a deep dive. We introduce the concept to the level 1 program, but in the level 3 we really go deep. And this is a really interesting intermarket analysis relationship. The relationship between consumer discretionary and consumer non-discretionary spending. Reflected in stock prices, because stocks, of course, are the ultimate leading indicator. And when there's a preference towards non-discretionary items, i.e., Clorox, bleach, Campbell's soup, versus discretionary Gucci bags, BMWs, whatever, that's usually a harbinger that, hey, there's trouble to come. So it's kind of interesting how this divergence, I don't know whether I would actually call it a divergence, but there's very noticeable structural fail in this relationship, sort of pretended that, hey, trouble was coming. So I don't know whether I really want to call a top in the market until I actually start seeing structural failure in this relationship. So I don't see that there. And as I said, the breadth is actually starting to improve a little bit, so that's not bad. Small caps, of course, recently have been dramatically outperforming large caps. Remember we talked about this Russell 2000 relationship. Maybe it's time for the big caps to say, hey, who's driving the bus here, kind of thing. I did notice, remember, we've been talking lots about this, about oil recently. Is this market actually breaking down? Is this an oil top? That thesis was working away rather nicely. And it's interesting, through the daily brief report, Julian was telling us that he actually hit this down move twice. And then he went back to the well a third time, which is always not good. Never go to the well a third time. And he got stopped out on this big spike up top here. But, it's a trader's life. What can you do? Point that I would just make here is the message I think I was giving all of you yesterday was sort of like, until we actually do bust through these lows and this thing actually emmed out, it's nothing more than a trading range. And it's fascinating how very typical sort of crude trading, they come down, wash these lows for liquidity pool, rally right back up, wash these lows, liquidity pool, dump back down against these lows. Interesting that they did not go after this low. And then turn it right back up, and here we are right back up at the top of the range. The problem here, of course, is that now that we're starting to paint one low, two lows, if we get a third low here, then this is actually going to start and set up that kind of scenario that I talked about. That if we start busting up through this major ceiling level here, gee whiz, this damn oil could rally right back up top. Maybe. I mean, they're going to be talking like inverted head and shoulders, and this is actually a shoulder. I don't think so. But, so what? Brian's opinion doesn't really mean anything. So the point here, and seasonally too, I really don't like the idea of stepping in on the long side in oil at the end of May. This is, unfortunately, I think this is more conversation about 2020 as a screw year. We'll see how the traders do here. I suppose one could argue the really slick traders are coming in and shorting against these highs, but they have a very small risk window. Me personally, I really don't have any interest in a trade here. This isn't something that interests me. And of course, I've told you before, I don't really even want to own oil anymore. That was a 20th century story. I want to be in 21st century stories like eyes. Boom. We'll get to that in a bit. It was interesting to see that as the oil was working its way lower, we were starting to see the gold market start to work its way back up. Been showing you these fun charts on gold and silver recently. Um, and interesting how we had some more sort of, we talked about, on the silver trade, which is the trade that I would prefer out of the two right now if I had my druthers. The gold trade came right back down to our trend line, just gapped violently higher, but basically just gapped right up into the original M fail level there. So I still think gold is sort of trapped in this. Am I a bot or am I a double top breakdown M fail? And I don't know. Jury's still out here. And then the silver, and what I really liked about the silver here was we had this low. And like I had showed you just a moment ago, if you drill down to that lower time frame chart, you can really see it well. You had this low, and remember that gap was right there. So you had that low, then you have that low, then you have that low, all making slightly higher lows. Show me a new high, and I'll show you a buy. We haven't broken out through the top. It would have been nice to see the silver punch up through the top here. So not quite ready to go. But as you can sort of see on what our conversation on the site was today, was we have a simple rule. You cannot take a long trade on a trend line breakout because you can see right now that that's a dangerous trade. If the oil is actually ratcheting back up, we might find that these metals have to come right back down. It happens all the time in this damn game. So the key for me here is if I am silver bull and if I was thinking about adding to futures trades or anything, I really need to actually see market structure now on the other side of this trend line. Any kind of W on the other side of this trend line, I think actually that's not a bad lower time frame long. But as it stands right now, longs were initiated on down here. I do like these targets. It's interesting. This consolidation sets up a chaos level there. This consolidation sets up a chaos level there. Sure enough. And if this is accepted above, its next chaos level's up here, which just so happens to be here, which just so happens to be the bot level. So I don't see anything wrong with being long this trade and just working it in as it stands right now. You can clearly see we lose these levels. That's an M. You better get the hell out of there on the long side. For the time being, just big hurry up and do nothing. And interesting enough, like we said, the gold's just sort of trapped here in this range. Big jump up. Of course, retail goes and buys the top. Then oil starts to rally right back up. And now you can see gold's actually going to maybe paint a shooting star here. So as I had said just a moment ago, really good analogy of gold and oil usually have to move in opposite directions. Bonds, hurry up and do nothing. So kind of like I just said there a moment ago, gold, hurry up and do nothing. I'm getting the feeling this channel, same. And I don't know whether I really want to get sucked into this idea that the US dollar index has broken down in earnest. I just don't know. And unfortunately, it's too small of a trade to really actually set up a trade. But, if this thing gets going in earnest, we're probably coming right back down to this AB equals CD level. If that's the case, then my hunch for whatever it's worth, the bonds actually end up topping out. The stocks continue higher. The euro continue higher. The commodity currencies continue higher. How the gold is going to act through that's a really good question. Like I said, I like the silver and I like this sort of industrial proxy, the actual growth proxy. I like that angle versus the gold, which frankly speaking in my eyes, remember you saw that gold-silver ratio. I mean, gee whiz, gold's very expensive right now. And on over to junior stock land. As we said, stocks pointing higher, made another new high. I don't see any reason why we can't work our way higher in the stocks. Look at that. I still have this head and shoulders here on this chart. So, how ironic when you look back in hindsight, you go, duh, well, gee whiz, it's going to the head and shoulders target. And that's 78.6. And there's horizontal support and resistance. That's a liquidity pool. And I wouldn't even be surprised if we drilled down. There's probably some gaps up in here. But anyway, it's doing what it's doing. Away you go. I wonder whether, we're getting awfully close to the end of this move. I wonder whether maybe the small caps, with the way they're acting right now, are kind of suggesting that, maybe we're getting near the end. I don't know. It's tough to say. If I do start getting M's on this kind of relationship, remember I showed you the XLY, XLP. If I start seeing signs that some of those internal measures, breadth, put call ratio, those kind of things start rolling over, then I think we're probably near some sort of pivot. But I don't see it here today. So simple as that. Really great example of the fun that we have at TRI. And keep in mind, managing money, following a trading plan, all that kind of stuff, it can actually be really boring. So we do try and find ideas and have fun in the market. And this little eyes is it was a cute little play. And lo and behold, and what a surprise. I think I told you all I picked some of these up at 7. So my order to sell's up here at 14. Kavarkanator, I mean, the guy loves trading circles around me. It's almost embarrassing. But Kavarkanator was telling me, oh, that's nice, Brian. Well, and Brian's waiting for his fills. It got as high as, how high did it get here? It doesn't say. Darn. Isn't that weird how the quote's covered up there? Oh, well. Anyway, looks like it got as high as about 12.5 or so, and Kavarkanator was telling me, yeah, Brian, I picked some of this up at 6, so I've already got a double off. So I think he also said he bought some more up top, so don't feel too empathetic for him. But the Duke, of course, doing what he does best, and everybody should look at this. He loves these options, or these warrants, beg your pardon. And this is such a cute example where, ironically enough, the stock itself is not even really doing anything today. But somebody's got an appetite for these things. And now Mr. Kavarkanator's got himself a free position on this thing. And the irony of it all is he could probably go and throw his bid in. You see the gap down here at 7 cents. He could probably go and throw his bid in and get filled on some sort of dump back against those lows on the coins. Did I just say coins? Warrants. That he sold up top. And hopefully now you go, gee whiz, I understand, Brian. It doesn't really matter what the hell this asset is. It's all the same. All we're doing is trading human behavior. Yeah, I'm reborn bullish. Look at me, FOMO. And then we're selling. And then, it's the end of the world. Dumpy. And we're buying, right? It's just that simple. Rinse and repeat. The cool part about this thing, and I was joking with Kevin, I was like, that's cool that you got a double off, but you do realize my target on these warrants is like 60 cents. So if I can establish a nice risk-free position, remember I'm long from 7, I'll probably let some go at like 14, 15, typical Brian. And then if I just hold on to the rest of them for that 60, 70 cents, fine by me. Just try and get yourself into that position of strength. Anyway, a fun story in the stock market today. As for crypto, I am seeing more and more rhetoric about how altcoins are looking very, very bullish. You're always sort of left with that kind of feeling, yeah, but, they always say it looks most bullish at the top and most bearish at the bottom. So I don't really want to sort of get suckered into chasing. I really do want to try and focus on trading setups, which in essence means I need to see a move, and then I need to see a consolidation, and then I need to see a resolution of the consolidation. If the resolution is in the direction of the original move, i.e. trend continuation, then it's bots. If it's a retracement, big move, consolidation, then retracement, then I'm thinking L-tangonators and 50% retracement kind of ideas. So, unfortunately, the sad part about it for something like Bitcoin itself is I don't think there's really much change to this thesis. It's really boring, and it's really slow, and it's really plod, but really, if anything, now we're up into here. I think we can move our arrow to you are now here. So we're just slowly working our way through this scenario, but I was basically looking for a counter trend rally back against these highs. And lo and behold, it looks like we've got it. I've just, this reload zone here happened to be off this dump range here. So it did make sense why a top came in this area here, red boxes. I suppose we could take our little reload zone tool now and just even go off of there to there. And if we zoom that in, you should see one of our buddies that we have talked about lots on these public videos. Good old Mountain Man, one of the best crew traders I ever met. Pretty solid performer. Has come in and has stopped the rally. So not really a big surprise. And very normal price action. There's nothing really out of the ordinary here. The question ultimately for something like Bitcoin is you can clearly see there's a top up here, there's a top up here. If this really is a bull and now we're at 9,500, well, just go and put on another $500-600 and break out through the top. You do that, we know that you're a bull, rah rah bull. Let's all go crazy. We're not there now. We're only really. I would almost argue that we're maybe about 0.61 of the way to the top. And interestingly enough, if this is indeed a top, well, it's these candles, right? And in our school program, we teach the concept called the institutional fingerprint. It's this candle, and you might even argue this candle and this candle, but, this candle and this candle, this candle and this candle. Think of it this way. The public is FOMO buying, buy, Bitcoin's going to the moon. But somebody came in here and stopped the rally. It's not the public, I can tell you that, absolutely. So who is it? And remember, institutions sell up markets, they buy down markets. So if we look back and we see the price come off, well, we can look up here and go, well, that's probably Mr. 1% that was playing their games. Interesting thing about this, though, is I don't think we've actually done anything other than just sort of trade back down and really not even down to the lower end of the range, sort of just back to kind of the middle of the range. And so the range debate goes on. My expectations going forward here is probably more along the lines of what I've been, and if anything, it's good that I'm relatively consistent. My expectations over the past few weeks have been sort of a similar price action to the last halvening event price action. I don't see any reason why we don't see the same here. So that's basically what I'm thinking Bitcoin. Now, we've got one low, two lows. If we can now come down, notice here we come down. If we can, after this rally, if we can come down, test these lows, hold the lows, and then turn back up, well, we might actually have to start thinking about bullish setups on the corn. But for the time being, I'm just sort of in sit and wait and watch mode. Bitcoin's already had a big fundamental event window. So the question ultimately is, why would I buy more Bitcoins down the road? What I do find interesting in the crypto space is Ethereum seems to like to sort of fly under the radar screen to a certain degree, but man, their fan base, and I even put out a holy, what the hell's going on with Ethereum tweet yesterday, and their whole fan base went nuts. This kind of, it's almost funny when you get these, right? I put out a tweet going, what the hell's going on with Ethereum? And again, my sort of call is, can you remember, I'm a chart guy, I'm a trader dude, right? So buy low, sell high, blah, blah, blah. So I'll look at a price chart and I'll be like, hey, something's going on here. And my request is, can you please tell me what the hell's going on here? Fundamentals, what's the product? What's the service? What's the catalyst, right? And I put sort of the call out, hey, can you tell me what's going on here, please, crypto world? And this is the response I get. Typical crypto, eh? It would be really interesting to see if Mr. Putin could put Mr. Vitalik on a workout routine and get him all buff. That would be a scary image. Anyway, I'm not quite sure. There's people are saying yes, ETH 2.0. I know that there's something coming down the pike from these guys. And, the irony of it all is we kind of did these lines off of Bitcoin for you, these channels. I don't see any reason why the market can't trade up to this, 1, 2, 3, and you also have this one, boom, boom, boom. I mean, there's some sort of unfinished business up top here. And, well, this, in my opinion, is kind of like a scenario where, the race car is there. It's getting fueled up. The spark plugs are all shiny. The driver's in the driver's seat. It just needs someone to wave the green flag. It's sitting there. It's on the launch pad. The price momentum's right. The price structure is right. It's got to have a reason. So what's the reason? I'm not quite sure what it is, but I'll tell you, I'm very interested in going and buying some deeply out of the money calls, like 280 calls here now. At this bought objective, they're going to be worth about $33 or so of intrinsic value. And right now I can buy them for like 0.1 ETH. I'm not exactly sure how exactly this math works on these Deribit options, and I've been asking my local guys to try and explain it to an old dinosaur like myself. But I'll tell you, if this does start resolving bullishly and we start punching up through here, I mean, it's almost worth a shot just to throw a couple $100 at it and just see what the hell happens. Mr. Vitalik comes out and he's all buff and he's Vitalik 2.0. And Ethereum's ready to rock and roll. The one thing I've learned in this business, everybody, is don't get into the business of making predictions. It's a mugs game, and the market will often do exactly the opposite to what everybody else is thinking. I mean, into March, April lows there, everybody was saying it's the end of the world. So what does the stock market do? Go straight up. How do you make any sense out of that? So this is why I highly encourage everybody who, they come to me to try and learn what I've learned over the past 30 years is don't trade opinions. Don't tell the market what you think is going to happen, because the market's probably going to do whatever the hell it wants to do. Trade setups. What are your 3 things that if you see these things happen, you will act without reservation? Gotta tell you, man, I'm starting to look at this chart. I'm starting to see 3 higher lows. Starting to see market structure set up off of bought levels. I'm starting to see trend line breaks and market structure on other sides of trend lines. I mean, this is just purely price analysis tool. I haven't even gotten into indicators. And this thing's, you never know what the hell's going to happen in capitalism. You just don't know. But I'll tell you, that image really caught my attention this morning. Something's brewing there. So food for thought. I don't, obviously everything that I talk about in these broadcasts is purely my opinion. I have no fucking clue what's going to happen. Does anybody know? Try to put yourself in a position that if the market proves you wrong, you can and will act when proven wrong. And, if you are proven wrong, it doesn't hurt too much. Those people that are trading on margin and leverage and stuff, you have to act when you are proven wrong, or else it could hurt a lot. Great one reason why I love trading the options market is actually you can completely determine your risk the day that you purchase the option. So it leaves you in a very flexible position. So, all right, I think I'll leave the rant at that today. Sure hope you got some value. Having a lot of fun in the daily briefs and on the site. And, of course, we have a whole bunch of new students that are all aspiring to be new traders. So, super exciting times around TRI. All right, everybody, have yourselves a great day. All the best, and bye for now.